Hey guys. All content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Yes, it is me and I am back again, to the immeasurable despise of all my haters calling me a shill and that my content is crap. The retracement we foretold about AMC and GameStop came in hard today. We saw a major sell-off on stocks. Now, every time I say a meme stock had a sell-off, I get bombarded with insults of angry little clowns calling it disinformation and warning me about how dangerous it is to say the truth. What these fragile little eggheads aren't considering is that meme stocks are very popular with non-investors as well. Tons of people from Wall Street Bets and other popular trading groups watch what stocks get a lot of mentions and will jump on them immediately. GameStop and AMC both get a lot of love and get a lot of word of mouth frequently. So the result of this is thousands and thousands of retail traders who jump in to ride and swing a position for a quick upside before selling it off. Big money invests a lot of money paying firms to tell them what retail traders are buying so that they too can ride and manipulate price movement to their benefit. The result of these two powerful groups jumping in is huge run-ups like the ones we see. That isn't to say people like us are selling, quite the contrary. I have said many times how important it is to keep meme stocks relevant in the eyes of retail traders because it will bring in long-term investors over time. These run-ups get our name out there again and again, it gets people to ask questions and inspect further, and that's how we grow. Meme stock communities are incredibly strong, and that no matter the ups and downs, we aren't selling, so I don't get why there are so many fragile people filling my comments with insults to me when I say we had a sell-off on meme stocks. It wasn't our investing communities, it was just the general traders who come and go. As far as news go for meme stocks, the GameStop wallet is now fully integrated with Immutable XL2 protocol. Now, I do have some news that might not be welcomed. In fact, they will garner me hatred because God forbid I inform you guys of some facts, but I don't care about your feelings. Before I let you guys know, remember that I am a hardcore meme investor who buys and holds and DRS my GameStop shares. Having said that, as of right now, because cryptocurrency is going through a winter cycle with weakening price action, the Immutable X NFT market sales volume hit a new low, plunging more than $48 million. Furthermore, according to various news media sites with cited sources, GameStop's NFT marketplace has been struggling since its launch. Now, we must acknowledge that it is new and due implementation of many features which will help it boost activity in the future. Furthermore, GameStop's NFT marketplace could not have launched at a worse time either, coming in during the crypto winter, but it is still worth noting that it is not performing well according to various sources with credible evidence. On July 30th, GameStop's NFT marketplace had its worst day, bringing in approximately $13.40 per hour. For that whole weekend, total profits came in at roughly $4,696.41. My take on this event is this: I think it will take time, more than originally estimated and anticipated, for people to discover GameStop. This is the beginning of a storefront with the potential to yield a lot of value, and we know cryptocurrency overall isn't going anywhere. It's simply going to take time. The first day of GameStop's NFT marketplace suggested strong volume and interest, but over the passing days and weeks, it is clear according to the available data that interest is going down, most likely because of the current economic climate which is weighing in heavily on crypto. To give you some numbers, an Ars analysis suggests GameStop's NFT marketplace to be responsible for about 5,254 Ethereum in total trading volume during its first week, which on a daily average is about 750 Ethereum, or $1.1 million in total trade volume. Since GameStop takes 2.25% fee on all trades, this means that our beloved company takes in $25,113 in direct revenue. However, this was during the first week of launch, and interest is falling down significantly, so the total daily revenue the company is making is decreasing week by week on average. Again, this is not a testament of what the future holds for the storefront, but rather the current reality as we brace in economic uncertainty and less trader engagement in crypto. I do have some criticism of the GameStop wallet itself. I think that GameStop needs to start targeting influencers with significant followings to promote their wallet. They need to incentivize people to switch over to their product to bring in more people. Even more so, I think they have a lot of room to improve on how the wallet looks. Again, I understand the product just launched and it's still in a basic state, but the longer you take getting things done, the less likely you can have a strong comeback. You need to take advantage of the momentum right now and get things rolling. Again, That's my opinion on the matter of where I see room for improvement, where GameStop can take advantage to bring in people and revenue. We shall see how things develop over time. Now, I want to talk a little bit about the current market gloom taking place as people worry over the CPI data that will be released tomorrow. I want to approach the topic from the angle of recession, which is the net hot buzzword making headlines left and right. After last week's job report, we have seen many analysts and financial publications assert the narrative that we need to ease on the fears of a recession, that the peak of bad things is behind us, and that we need to engrave in our heads that we are not in a recession at all. The optimism in this opinion, only granted by one dataset, which in my opinion is not very strong, is gravely misguided and could have catalytically worsening effect on how stocks fall. Let us begin by affirming the evidence behind this optimism, the job report, which increased by 528,000. This is twice the consensus forecast, and by being at 3.5%, this unemployment rate is at pre-pandemic levels. We also saw wage growing at 5.2%, which was above consensus. We understand recession to be triggered by two recurring quarterly GDP declines, but I also agree that the concept for a recession can also be more complex and account for more than just GDP numbers. We have been in a recession since 2020, and though the GDP fell a bit from 2019, it still surged to an all-time high in 2021. There are many indicators that show signs that the current strength of the labor market is not as strong as government officials want to make it seem. We are also seeing job openings decline at a historically rapid rate, with weekly jobless claims increasing, and several companies like Google and Tesla signal that they have intentions to slow down on hiring and on laying off workers. The White House might boast about strong employment numbers, but if you look at most recessions historically speaking, you will see that right before the markets slope down fast, employment is typically very strong. Having strong employment prior to a recession is actually one of the most common tropes of a strong bearish economic events. The problem that strong wage increases has on the current state of the economy is that because of the current hawkish approach by the Fed, this will have the opposite effect of recovery. The current conditions of the market have it that every time there is actually progress, the result will be negative because the Fed cannot lower rates without ensuring a recession at the moment. If this isn't enough to convince you, note that even the most highly optimistic analysts are warning of flashing red signals indicating global sell-side ratings are back to the peak bullishness levels reached in 2000 and 2007, where we saw global equities halved. Even BlackRock, the most powerful corporation in the entire world, has said that they have not and do not plan on buying stocks on this dip yet, which to me means they understand that the only way things can go longer term is downside. Adding to the sorrow sense of despair, the dollar edged lower today in summer trading as markets wait and see ahead of what the inflation figures will be tomorrow. The reason why tomorrow's CPI number are so important is because they will be key to how aggressive the Federal Reserve will be in its expected interest rate hike coming in September. Like I said yesterday, I think investors overall expect tomorrow's numbers to be bullish, with a bit of a cooling, but nobody is willing to get too risky in these expectations. They know if they catch the wrong side of the trade, they will get absolutely crucified. I expect overall economic recovery to be slow. We will not be recovering in the form of a Nike swoosh like we did in 2020. This time, I think we will see many bull rallies and huge pullbacks. Regardless, any and all of these rapidly deteriorating economic conditions are having negative pressure on GameStop and AMC, which has allowed me to get more for less, and for that I am eternally grateful. Again, I strongly believe that the conditions GameStop and AMC find themselves in make them the best place to hedge. The strong retail buying constant momentum, the fact the companies are holding off strongly with bullish reports and catalysts, and the overall continuous popularity it has in the entire world make them a must-have, and I think a lot more people than we currently think are coming to realize that as well. Tomorrow I will pump another little video talking about the CPI and what it could mean going forward. Know that I love GameStop and I love AMC. I might be wrong, but I think I am the only YouTuber with a significant following that posts screenshots of some of my own purchases on a recurring basis on Twitter. Though not all news at the moment are bullish and we have differing opinions on what the near-term future for GameStop or AMC might be, know that I am here for the long term, holding till I am rich or completely lose my investments. It's an absolute pleasure holding with the best the community has to offer, which are all subscribed to the channel. I urge you to take a peek at my Discord, especially if you like day trading stocks or options. We had huge winners today there, and I encourage you to come over and participate with over 8,000 other people. Other than that, I hope to see you tomorrow. Enjoy the rest of your day and to the moon.